Good morning, traders. Matt Weller here, Global Head of Research with FOREX.com. Today is Thursday, the 18th of June, 2026. It's my dad, Pat Weller's birthday, so shout out to him. But more importantly for you, we are seeing markets on the move as they digest yesterday's Fed meeting, the current central bank meetings that we're getting across Europe, and spin it ahead to a key volatility event risk that's a bit off the beaten path. In today's video, I'll break down everything that you need to know ahead of today's US session. Let's get into it. The biggest moves that we're seeing in markets are higher yields in the US, and that's pulling the US dollar higher. That comes after an FOMC meeting, which was, broadly speaking, more hawkish than expected. New chairman Kevin Warsh positioned himself as a reformer, creating 5 separate task forces that will look at essentially all aspects of how the Federal Reserve operates. But more importantly, for immediate policy, about half of the committee expects to raise interest rates this year, and Kevin Warsh did little to pour cold water on that expectation. As a result, we see oil in retreat. U.S. indices are recovering after pulling back yesterday, and the U.S. dollar is rising yet again, now at 13-month highs. We'll continue to monitor the situation when it comes to the Federal Reserve, but it's worth noting that traders are pricing in about a 1 in 3 chance that the FOMC could raise interest rates as soon as 6 weeks from now at its July meeting, and about a 2 in 3 or 66% chance that the Fed will raise interest rates by its September meeting. Shifting our focus across the Atlantic to the UK, we did have a Bank of England meeting that came out broadly as expected, with that central bank leaving interest rates unchanged at 3.75% in a 7-2 vote. But what is drawing my attention is a local election in the UK in which Andy Burnham is likely to win, and there are rumors that he could call for Prime Minister Starmer to resign, or at least work some back channels to point in that direction in order to take over the prime ministership of the UK himself. So there's a big element of political uncertainty when it comes to the pound and other UK assets, and I want to share a couple charts with you guys to make that a little clearer. This chart here from Bloomberg shows the implied volatility in the British pound, and you can see it's absolutely surged from some of the lowest levels that we've seen in 2 years last month, now to the highest level that we've seen in at least 2 years this month, that as traders try to digest the political situation and any new policies that could come out of the UK, which of course leads us into today's chart of the day, the British pound versus the US dollar here on a daily basis. You can see pound dollar had been relatively range bound, reflecting that low volatility we discussed earlier, basically bouncing between 133 and 135 since mid-May. Today, though, we are seeing a breakdown below that support level, bringing the year-to-date lows closer to 131.75 or so into sight. That'll be a key support level to watch, but if there's more uncertainty weighing on the pound, there's nothing traders hate more than uncertainty, and that could cause pound dollar to even break below this level to multi-year lows. So do keep a very close eye on that key support, again around 131.75 in pound dollar as we head into the weekend. That is today's video. Thank you for carving a couple minutes out of your day to watch. If I could ask one quick favor before you go, please just drop a like on this video. It's a free way to show your support and really helps us with the algorithms. And if you're not already, please do subscribe to our YouTube channel at FOREX.com. Thanks again. Best of luck with your trading. This will be the last video of the week as it's the US holiday tomorrow, but I'll be back in your ears on Monday. Thanks again.